Hey traders, Jason here from Levitt Brothers. This is one part of a short series where I'm going to be talking through some trades. Instead of doing like a 30-minute video, I'm going to break it up into smaller bite-sized chunks. Everyone should build a library of trades they've done and charts they're following, which can then be studied. Okay, this is essentially what I'm going to be doing here, just talking through charts and setups and trades. If you do this enough, you'll train your eyes to see opportunities. Okay, you'll train yourself in how to manage trades. Trades tend to fall into two different categories. Either the market is doing really well and charts of individual stocks are doing well, so you don't have to be overly detailish with entries. You just need a pretty good entry. Okay, in this case, striving for perfection will cost you. Or the market is less clear, so we need to be more technical and exact with entries. So some of these charts have exact entries. Others I'm just getting into because everything looks great and I don't need to be overly exact with everything. All right, so let's go through it. Here's CrowdStrike. Nothing overly complicated here. A great company, a great stock, fell on hard times, got cut in half from 400 down to 200. Then it based, formed a cup and handle bottom pattern here, as you can see, and then it broke out, and then the stock just simply acted orderly, and you didn't need to complicate much. Okay, it breaks out to a higher high, then it flags, gets support right there from the 21, moves up, and then it flags again, kind of a little bit of messiness right at the 21, and then it breaks out again. Very orderly, very constructive, stock acting well. You can buy a dip, put a stop in place, and let it go. You don't have to make things too complicated. Here's Disney. Stock has not done great over the years, okay, but there's some trades to be had. So it got rejected by the 21 there, 21 there, 21 there, 21 there, 21 there. It got above the 21, but then lost it, okay, but by getting above the 21, I think that's truly resistance. Something's pushing it back, but the fact that it could push above it for almost 2 weeks means it kind of pecked away at that resistance. Okay, so it moves up, and then it flags over here, breaks out. You can see move up, higher high there, lower high there. So you need a little bit more clarity, but then it starts trading very orderly right on top of its 21, moves up on this day. We got volume over here, gaps up, and then as you can see, it goes up from there. The big gap up here was because of earnings, but the trade was still there. Okay, the trade was still there. If you collect these charts and look through them and study them, go bar by bar, week by week, you'll start to note things. Okay, coming off the low, got these reversal candles, moves up, flags in a very orderly way, rallies up, moves sideways for what looks like about 6-7 weeks. Get some support from the 21, flags again, moves up. Collect charts like these. I didn't play this one. I don't like the company. I've never had any success trading it. I just haven't traded it in years. But I could still study this and see that it's what a good orderly acting stock looks like. DLO, bottoming pattern here, moves up to a higher high, flags, moves up again, flags, and then moves up again. Okay, you don't know if a stock's going to break out and do this and just move up for a week and then fade and give it all back, or if it's going to do this where it rallies 30% in less than a week. Okay, you don't know. Okay, what you can note is that the stock is improving. It's getting stronger. It's getting healthier. It's less bad. You could be buying a dip with a tight stop, and then you might get 10% or you might get 30%. You don't know. You could just play it. Here's FTNT. Okay, obviously weak stock, trending down. It was a great stock, but that fell on hard times, was trending lower, gaps up. This is probably earnings. I'm not going to go back and look because it doesn't matter. But instead of fading and giving back those gains, it built on those gains day after day after day, moves up, proves itself, gets above the 20, it's above the 21, and then it just consolidates here, gets tighter and tighter, acting really well, quieter and quieter. Resistance up there near 78, 79, support from the 21, breaks out, then it fades back, finds support at the 50, and then goes again. So a lot of traders would probably get out over here. it goes below the 21, get out. I can't argue with that. That's probably not a bad idea. But just because it takes out that 21 doesn't mean you should abandon the stock. Okay, all it did is come down here to the 50, peck away at that for about a week, and then moved up from there. Okay, don't abandon a stock just because a key level is taken out. Okay, you should manage your trades wisely. You might need to get out of the trade, preserve your profit, but keep it on your radar because maybe the stock just needed to do a little backing and filling. Maybe there was a big seller there that had been holding for a while, and they wanted to puke their position and just get out. You don't know. Okay, so you don't have to give up on a name just because it moves against you a little bit. Stock was acting poorly, suddenly came to life, was definitely in play, definitely a stock you wanted to keep on your radar. And when it gapped up over here and you got some good volume, you could jump on that. Next up, GEV. Okay, this stock had acted extremely well for a really long time. Trending up, it's a little bit loose. There's some gaps in there and stuff, no doubt. But there's no doubt that it was moving up and holding gains and consolidating gains and then moving up again. So it made a higher high there, didn't get any follow through. It just flagged, moved up again, flagged, moved up again, flagged, and then as you can see, it just continued up from there. You don't always, again, I've said this before, you don't have to always clutter your charts with a lot of indicators. Sometimes a stock is just acting really well, and you just want to buy a dip, okay? Just buy a dip, put a stop in place, buy a dip, put a stop in place. And if you get a situation like this where it makes a higher high but then fades backwards, you don't have to panic, okay? It's perfectly normal for a stock to print a higher high and then fade backwards, do a little backing and filling, find support at a key level, find support at a moving average, and then move again. Okay, stops are, the placement of stops is a tricky topic within traders. For traders, because sometimes the traders put them too tight, and then they get stopped out, and they get pissed, and then they abandon the stock, and then 2 weeks later the stock is up here, and they look back and they realize that the fact that the stock just faded backwards a little bit wasn't that big of an issue. So look at this chart. Okay, look at it, study it, note that this happens. You have several months of consolidation, higher high, fades backwards, breakout, couple days of follow through, sideways movement for about 2 weeks, breakout again, sideways movement for a couple weeks, or less than 2 weeks, and then breaks out again. Okay, study the sequence here so that the next time you play a breakout over here and a stock doesn't immediately show you a big profit, it's okay. As long as the stock's acting right and the market conditions are good, you could probably hold as long as it holds a previous key level or a key moving average. And last one, this is a little bit more recent for us. The Honest Company rallied up here end of August, came back. I guess you can call this like a double. It's not really a double bottom. I'm not going to get into names too much. Whatever you want to call it. Cup and handle bottom, whatever. Definitely stock was starting to improve. You got some, big volume there, big volume there, big volume there. Something was going on there. Dip back, comes back up to resistance, dips back, and then it breaks out and and steadily moves up. And then this big candle here was earnings, but that doesn't matter. Even if you don't hold into earnings, the trade was there. Okay, the trade was there. Nice formation here. Again, study it, collect charts like this, train your eye to see these charts so that you can play them going forward. Hope this helps.